Good evening, students. Welcome to today's counseling session, which is for your elective paper, paper 6E, Global Financial Reporting Standards. So today's session is again on the MTP 2022, which is for your May 2022 examination. This MTP April 2022 for GFRS paper, Global Financial Reporting Standard paper. This we are going to discuss 2 case studies. If time permits, we'll discuss. And in case you have any queries, you may ask me. Please feel free to ask any of the queries with respect to mock test papers, so that we can use this session effectively. Before starting the session or before starting discussion of the case studies, I would just answer the queries which we have received beforehand through those Google forms which was there through this announcement for the counseling session. We have received certain queries and the queries were general. So let me just quickly run through the general part of this paper, and then we'll discuss specifically on the case studies. So let me present my screen just a minute. So students, hope my screen is visible to you all. Let me introduce myself, which I missed to introduce. I am CA Shilpa Agrawal, today your faculty for today's session. So before, first of all, because this counseling session is just a few days before the examination, so what students should have as an examination approach, let's discuss that. As you all know, this paper is an elective paper, and all the elective papers are an open book examination with 4-hour examination. This paper is running for 4 hours. So though the paper is of 100 marks only, but for every marks you'll be getting more time to answer the case study. In such a situation, what is important is that, and it is also open book examination. So what is important is that for the mark for core paper, if you are writing any answer, say a 5 marks question, you are answering for half page or almost 3/4 page or 1 page. But now for this elective paper, you have to write at least, if you're writing half page, then you have to write it, you have to increase the length of say by 3/4 page or 1 page. So that you have to keep in mind, because being 4-hour paper, open book examination, you cannot restrict your answer to the extent of what was there in the core paper. So it does not mean that you write theories or you write very diplomatically general answer. That is not expected, because this is your Global Financial Reporting Standard paper, technical paper. However, you have to substantiate your answers along with your certain provisions of the standards, which is there in your core paper, financial reporting also. But in this paper, you have to take care of that. You have to write a bit more. You have to be more in detail. You have to substantiate your solution in detail. So for 4 hours paper, you have to keep in mind, being an open book examination, then your answer should be more elaborated. Next point, which is to be, as you all are aware, that this paper has 5 case studies of 25 marks each. But for examination, out of those 5 case studies, you have to write 4 case studies. You have to answer 4 case studies. So choosing those 4 case studies which you have to answer is to be a wise decision. That has to be taken care of, because your performance is based on your first case study which you are going to attempt. Because once you start writing, if you are confident or you are able to answer, your confidence level goes high. It raises. Because of that, it boosts, and because of that, your performance for other case studies will also be better. If in first case study only you are going to stuck up, you are not able to answer confidently, or somewhere you are missing it, so your confidence level will go down. So choosing first case study is also very important. Case studies, as you know, that every case study has mix of MCQs and descriptive questions. Your MCQ question is for 10 marks. Out of 25 marks case study, your MCQ is of 10 marks, which is divided into 5 MCQs of 2 marks each. No reasoning is required. You have to answer simply out of 4 or 3 options which is given in your question paper. You have to mark the best appropriate answer. hereby saying best appropriate answer, it may happen that it appears that all the options which are there, they are interrelated. Somewhere seems to be same or correct. But out of 4, which is the best appropriate answer, that you have to answer. For now, with the revised scheme, OMR sheets are provided. So MCQs have to be answered in your OMR sheet. Remaining 40% of 25 marks, that is for 15 marks, sorry, remaining 60%, which is your subject descriptive paper. So 25 marks or 60% is 15 marks. So your descriptive questions, which will be tested in your examination, will be of 15 marks. How to improve marks in the examination? Because you get, in this paper also, you will get 15 minutes before starting your answers. So before writing answers, you'll be getting 15 minutes for reading the question paper. Question paper will be distributed 15 minutes before. So because in global financial reporting papers, question paper runs into almost 30 plus pages. If it runs into 30 plus pages, so it is very difficult for a student to read all those 30 pages in detail or very carefully in those 15 minutes. So what you have to do is that you have to give a glance. You have to give a glance at least to choose which case study you are going to write first. So have a glance of the case studies. You'll be just getting an idea what nature of standards which are being tested in that particular case study. If you are confident with those standards, then you can read that case study in detail so that you can understand whether you have to opt for this case study or not. I'll advise you go with 2 case studies in those 15 minutes. Don't go for all 5 case studies to read because you have to leave one at least. In case you feel that both the 2 case studies are okay with you, then you can choose from that. Otherwise, just quickly run to another case study. These are very common points which I hope all the faculties have discussed, that you have to write all the subparts of that particular answer questions in the same sequence, or if not in same sequence, then at one place. Like for example, if you're choosing case study 3 first, so case study 3 descriptive part, you have to write 3.6, 3.7, 3.8. Either you can start with 3.8, then 3.6, then 3.7, but all the 3.6, 7, and 8, all these 3 sub-questions of that particular case study has to be answered at one place. After completing those answers, then only move to another case study. In case you feel that you have opted a case study and while answering or attempting it, somewhere you are missing or you're not able to answer it properly, leave proper space, move on to another space, and then come back when you get time or when answer clicks to your mind. Definitely your handwriting should be legible, so examiner should not make extra effort to read it. That will not leave good impression on the examiner. So if your handwriting, I'm not saying it should be very good or beautiful handwriting, but it should be legible, it should be readable. Then only you will be leaving an impression that examiner comes to know that okay, he knows, or the student, he or she knows. Whatever assumption, in case you feel information is missing in the question or there is some lack of clarity, then you can put your assumptions before answering the solution. Stating assumption is very important, because if the assumption is logical and acceptable, that will definitely fetch you marks, even if it is not matching with the solutions which examiners have as a base for checking. Answer the questions with due emphasis on the provisions of GFRS. This is very important because this is an open book examination. You are allowed to carry any book. When you are allowed to carry any book, what happens that it's an open book examination, so writing at least the standard name and number is not a big deal. So you have to put at least the provisions of the standard will be applicable for this particular solution. That you should take into account. How to manage time in the examination? For 15 minutes time, at least give a glance from those 50 pages, read at least 2 case studies so that you can decide which case study you should attempt first. And in case what happens, sometimes you are reading the case study and you are not sure with all the sub-questions which are there in the case study. Then what to do? In that case, I would advise, if you are very confident with the MCQ part, those 5 MCQs where you feel that you are very confident, you can answer you know the answer, then choose the case study where you are confident with the MCQs. What happens in case you are slightly close to the answer, you have options in the multiple choice question. That options will also help you in clarity. Okay, you are close to that answer and there is an option related to that, then it is definitely that option is the correct option. One thing is that reasoning is not provided in, is not required in the answer. So it will save your time also to think more on the descriptive part of the question. So choose a case study where you are in dilemma whether to go for that case study or not. You are not sure of the descriptive question, but you're sure of the MCQ question, then opt for that case study. Because at least one correct answer will give you 2 marks straightforward without any reasoning. And even if you are slightly not sure, 95% sure, 5% is so options if are nearby, that will help you in guiding. Okay, this would be this my whatever I am thinking, my option is leading to me in that direction only. So that will also help you in finalizing the correct option. So that's my advice or my opinion. It completely depends on you in which you are comfortable or where how much you're confident about. But where I feel if I am confident with the MCQs, I'll choose the case study where I am more confident with the MCQs. Thereafter, allocate an lesson. Since this is 4-hour examination, so in every question paper, it is advised to spare some time for your revision for 10 to 15 minutes. Even also that in case you exceed your time for any particular question, you can cover it out from this 10 to 15 minutes. So you, while allocating time for each and every question, you have to keep spare 10 to 15 minutes. This 10 to 15 minutes spare time will help you in revision also. And in case you are exceeding any particular time limit of any particular question, this will be a buffer. This will be a buffer or cushion for you. Writing lengthy answers will not fetch you more marks. Though I am saying for this a 4-hour examination, so difficulty level will definitely be high. Your questions will be more on application and analysis rather than comprehension and knowledge, because you are having an open book examination. So writing to the point is necessary, but don't copy the provisions from the material. Because, and one more thing is that though it is an open book examination, be prepared with your whatever you are carrying the material, you should be aware what is given and what page it is given, so that you don't spend extra time in finding out the solution or finding out the provision. First thing. Second is that you should be aware of, you should be thorough with the provisions so that you don't require opening that book, because definitely opening those an open book examination, but will not help you much, because even if it is more than 1 hour extra you are getting for this examination, your question difficulty level is also high. It's more on application based. So definitely straightforward questions you won't be getting in your material, whatever you are carrying with you. So you should be thorough with the provision so that you take less time, or you should use that open book material for very few chances or very few options in instances you need that book. Keep it as a buffer with you, but don't depend on that open book, whatever book you're carrying with you. Try to adhere to the estimated time kept for each question. This is very important, because once you exceed your time limit for one particular, whatever you have allocated for a particular question, it will have a cumulative effect. In first question, if you have exceeded by 2-3 minutes, in next question you will exceed 2-3 minutes plus 2-3 minutes will go to 6 minutes. Then in third question again 3-4 minutes extra taken, then runs into 10-15 minutes. So try to adhere with the allocation of time which you have already decided before writing the examination. Few specific points which I have not covered in this PPT, but still I would like to answer. One of the query was what kind of open book, what kind of books should we carry for the examination center? See, students, open book examination, there is no restriction, but definitely you have to keep in mind the space constraint. You cannot carry 6-7 books along with you. That is quite not possible also, and you won't have that space also. Your table will be very limited, and other students will also be bringing the books. So be practical, bring one book which covers everything, and you have gone through that book very thoroughly. That is very important. So there's no restriction with which book you should carry, but in my, if you ask me, I would say it's always better to carry with you is either the case study digest, which is issued by us, and all other study material, because very comprehensive study material we have given. So every concept has been discussed there and is present there, so you can easily take it out, but definitely you have to study before that. No? One more question which was asked was that, sorry, just a minute. No? I have missed the query part. That query part is missing. Just a minute. Let me call the person who will help me with the queries if I have received anything. Okay, students, sorry for disturbance. I have to just check it out because I have missed that opening that particular portal where I have to see the queries. Thorough in-depth preparation. Before that, I'm just, whatever general queries I have received, I'm just going through that. One was what books to be carried, and second was how to manage time for this open book examination. So I told, because this is a case study, this is a case study examination. Okay, this is case study based paper. So whatever books you are carrying, they will not have direct case study there. Even the case study digest which we have issued, you won't find any direct case study from that. But still, that will help you in understanding what kind of questions are asked in the examination, and that will help you in your preparation and also in your during your examination also. So first point, we were certain specific point which is to be taken care of is before examination preparation. Very question making. Very good. There is disturbance in the sound and not much clear voice listening, ma'am. Can you please look into this? Okay, Anubhuti Bhav sir, I think this is somewhere, there may be some network issue at your end. Maybe I'm having some sore throat also. That's why my voice is cracking. But please bear with that. Or you just check your network issue also, because everything seems to be fine at my place. Okay, students, let's come back to the PPT again. First of all, as I advise you, few points which is to be kept in mind is, one is to go have a thorough study. Don't do any selective study. Don't do any selective study, which is very important, because all the IFRS are interconnected. If you leave any particular IFRS and you see, if you think that I will study only consolidation or business combination or financial instrument, so in business combination also there are certain aspects in which you have to study other standards also. For example, share-based payment, IFRS 2 you have to be aware of, because in business combination that is used. Your IAS 37 provisions in contingent assets and contingent liabilities, that is also used. Certain provisions are used there also. Even for your intangible assets, for your PP, many things are interconnected. So if you feel that if you do selective study, leaving some standards and doing some standard, that will not help you in gaining confidence and also surety for scoring full marks. So it is very important that you should do written practice. You should be thorough with your preparation and cover your entire syllabus before the examination. Next is written practice of both numerical and theoretical questions. See, now your syllabus, though it is a practical paper, but practical paper is not at par, it means that it is numerical paper. This practical paper means that your concepts will be tested in the application environment. Application of the provisions of the standards may be tested either in the form of numerics or in the form of your comments, your opinion form of how you are practically applying that and you're coming with the solution. So in such a situation, it will be definitely a theoretical solution also. So you have to be in practice of both numerical and theoretical questions. Your writing skill for theory questions should also be well prepared, well practiced. So because it's in DS is more judgment based, so you have to substantiate whatever you are doing with your with proper provisions, with your opinions, where you have for weightage, what weightage you are giving to the different facts, there are many facts. So which fact you are laying more emphasis, that is to be substantiated. That is the reason is to be given for that. So all those needs theoretical answering of the question. So be well prepared for even theoretical questions also. Written practice of each question by hand will help you in the coordination of your mind and your hand, and also your time management, increasing your speed also. Alertness while computation, because many questions will be numerical also. So for numerical questions, sometimes happens you are aware of the provisions, you are doing it correctly, but by mistake you you have taken wrong figure, or you just overlooked it and did it silly mistakes that will reduce your marks. So be alert with the computation and also with the numbers. Working notes, as mentioned it everywhere in every paper, working notes are very important, especially for this paper. Wherever you feel a particular amount of figure has been arrived by calculation of there are few transactions which has been used, and for that, based on that, your calculation has been arrived. So you have to substantiate that figure with the help of working note, and proper cross numbering of the working note with the main solution is also important. So this was the general guidance, which because many queries were asked. So this was general guidance. Now I will just move to the case study. I'll start with case study 5. So let me just stop my sharing and I'll do sharing again just a minute. So students, hope you are able to see my So students, hope you are able to see my screen. And I am going through the case study 5. Just bear with me. I'm not very comfortable with what is there. Okay. We started with case study 5. Now see, because each and every case study runs into 3 to 4 pages minimum. If for the examination question paper, if you ask me, it may run into 5 to 6 pages. So how to save time, how to do smartly, how to perform smartly. What I suggest for my paper is that first go to the requirement part of the question. Read the MCQs, read the descriptive question, and then start with the scenario. What happens in this one? You'll be able to relate. Okay, this scenario which I'm reading, it had a question, it carried a question. So you can go and easily mark it out. This particular paragraph relates to MCQ1. This particular paragraph relates to MCQ. Just let me try to explain. No, I'm just trying to explain it. My case study 5 is starting here. I'm first reading the requirement part of the question, then I'll read the scenario. This will help me to relate it. Okay, just a minute. Let me go to the requirement part of the question. Okay, first point is with respect to a joint operation engaged in the business of mining precious metals, how will the liability be disclosed in the books of Mega Energy India Limited? So here the key point is precious metals. Okay, so precious metals. I don't know why it is working with black. Okay. Then is, how should Mega Energy India Limited treat the insurance claim against loss of fire in its financial statement? So first point was precious metal, then is insurance claim against loss of fire. These are keywords which will help us in relating the scenario with the requirement part of the question. Third is, what is the amount of preference dividend to be reduced from profit and loss? So preference dividend. What for the purpose of computation of weighted average number of shares to arrive at diluted EPS, weighted average number of shares of optionally convertible debentures. So somewhere in the question, your optionally convertible debentures has been discussed, scenario this has been discussed, and now you have to relate that scenario with this particular MCQ. With respect to point 7, okay, here it is clearly mentioned with respect to point 7. Point 7 was just before the MCQ. This is your point 7. So we'll be coming out later. We'll come to this. Then we'll go to the descriptive part. Determine the entities to whom exemption for disclosure of related party transactions is to be given. Also examine the transactions with whom such exemption applies. So related party disclosure transactions, you have to keep this in mind. Determine the employee benefit expenses of any scenario which relates to employee benefit expenses. You have to connect that scenario with this particular question. What is the balance of total equity, and other equity as on 1st April 2022 with transition to IFRS? So your question somewhere should be dealing, your scenario should be dealing with the transition part. And you have to answer for reconciliation and everything. Keywords from each and every requirement for MCQ or descriptive we have marked out. Now we'll search that in the scenario. Okay. I'm just telling you how to progress in the exam, how to move ahead, proceed in the examination. Now we are starting with the scenario. This is the scenario. Case study 5. Mega Energy India Limited is diversified company dealing in various business and has many subsidiaries. This is always a background. Okay. First start is that Uttar Pradesh Government Limited holds 60% shares in Mega Energy Limited and 55% shares in Superpower India Limited. Mega Energy India Limited has 2 subsidiaries, P Limited and Q Limited. Superpower India Limited has 2 subsidiaries, namely A Limited and B Limited. Mr. KM is one of the key management personnel in. So key management personnel comes in related party transactions. So there was an MCQ which deals with related party transactions. So let me check what was the MCQ. Sorry, this was a descriptive question. So that was question number 6. So we can mark it out. Okay, this question is related to, sorry. Oh, I don't know what is going on. Okay, fine, no issues. We can work with this. It's not working. Okay, this is MCQ. This is MCQ. Sorry, this is descriptive question 6. This scenario, first scenario, Uttar Pradesh State Government, this relates to your descriptive question 6. The second is Mega Energy India Limited grants 150 shares to each employee on 1st April. There were 300 employees as on that date. The share will vest in the following manner. So this is related to employee. It means employee benefit expenses. We had somewhere, na? What is going on? I'm not able to. If I want to move ahead. I'm just stop sharing it and I'm doing it again. I don't know what went wrong. Okay. Now let me see if I can move it or not. Yes, I'm able to move it now. So I'm moving again to the descriptive part, and their descriptive part, see. Question 7 was related to determine the employee benefit expenses. So the second scenario which we read was related to employee benefit expenses. So we can mark out in the second scenario that descriptive question 7 is related to this particular scenario. Similarly, third part, balance of total equity. So we can relate with that. So again, moving ahead. What we did was, this was related to descriptive question 1. The second part, this was related to your descriptive, this was related to descriptive question 6, this was related to descriptive question 7. And then again we are moving. Third scenario is one of the recently acquired subsidiary XYZ Limited has to present its first financial statements under IFRS. First financial statement means transition date is given. So this is related to your descriptive question 8. So mark your questions, mark your scenarios which relate to particular questions that will help you in saving time. Again and again, you won't be required to reading it. Only keywords will help you in identifying it. And at least in this paper, this is the procedure. Now, this next scenario is Mega Energy Limited and Fuel are partners of joint operation engaged in the business of mining precious metals. So precious metals, which we just marked at the time, this is related to your MCQ 1. Okay. Now we'll just move on to another part of the MCQ. A factory owned by Mega Energy Limited was destroyed by fire. So destroyed by fire and insurance claim, we marked keyword in MCQ 2. Then we move on again. Mega Energy Limited has cumulative preference shares. So we were talking about cumulative preference shares there also. We were talking about optionally convertible debentures also. This was related to your MCQ 3 and 4. So be careful. This is related. We can mark it in this manner. Next, this was specifically mentioned in your MCQ 5 that with respect to your point number 7. So we marked it out all the scenarios. See, all the scenarios are now marked out. Now we can go one by one. First, if you want, you can read the question or you can read the scenario. This is now convenient for you to match with the question. Let's read first. Let's start with MCQ. I'm going with MCQ. The reason behind is that because they are first tasks, and second is no reasoning is given in your mock test solutions. But here I'll be explaining you the solution also. So descriptive answers are with you. You can match with the scenario. But for MCQs, their reasoning has not been provided. So I'm just going to the MCQs first. So first scenario with respect to MCQ 1 was Mega Energy India Limited and Fuel Limited are partners of a joint operation engaged in the business of mining precious metals. The entity uses a jointly owned drilling plant in its operations. During the year ended 31st March 2024, an inspection was conducted by the government authorities in the mining field. This inspection authorities concluded that adequate safety measures were not followed by the entity. As a consequence, a case was filed and a penalty of rupees 50 crore have been demanded from Mega Energy India Limited. The legal counsel of the company has assessed the demand and opined that appeals may not be useful and the appeal orders will be unfavorable to the joint arrangement. Out of 50 crore to be paid by Mega Energy India Limited, 30 crore will be reimbursed by Fuel Limited later, as per the terms of the joint operation agreement. At the year end, actual reimbursement was not received from the Fuel Limited. Okay, so there are two things. One is that third party, there was during the government is claiming from whom? Government is claiming from Mega Energy India Limited. Okay. Now Mega Energy, they are claiming for 50 crores. Out of this 50 crore, 30 crore is to be reimbursed by whom? Fuel Limited. Okay. Rest Mega Energy India Limited has to bear. That is 20 crore. However, government is claiming this 50 crore from Mega Energy India Limited. Finally, Mega Energy India Limited will get the reimbursement from Fuel Limited, but that reimbursement will be at later point of time. Your direct liability with the government is of 50 crore. Council is also feeling that you will be losing this case and you have to pay that. So in such a situation, provision has to be created for this 50 crore. The question requirement part of the question was, let me go through the, I'm just, okay, the question requirement part of the question was, with respect to a joint operation engaged in the business of mining precious metals, how will the liability be disclosed in the books of Mega Energy India Limited? Mega Energy India Limited have to disclose this liability in its books. So what will be the correct option? Provision for 20 crore and a contingent liability of 30 crore. How can it be a provision of 20 crore? Because government is claiming, is asking 50 crores from Mega Energy India Limited. So they will be taking this 50 crores, they will be claiming this 50 crores from Mega Energy Limited, irrespective of that further how Mega Energy India Limited is going to recover or to manage that fund. So direct responsibility is of Mega Energy India Limited, and government is asking for 50 crores directly from that entity. So Mega Energy India Limited, MEIL cannot may create provision of 20 crores because claim is for 50 crores. So first point goes wrong. Contingent liability of 50 crore, when legal counsel is sure that you'll be losing this case, so there is no question of contingent liability. So this question also, this option goes wrong. It's rooted out. Provision for 30 crore and contingent liability for 20 crore. How come for provision of 30 crore? Because ultimately they'll be recovering 30 crores from Fuel Limited, and 20 they have to bear it. So 30 crore provision is nowhere in the picture. So this is also ruled out. Now government is claiming 50 crore from MEIL directly. So this Mega Limited, they have to prepare the provision of this 50 crore. Okay, so this is the first part which you have to take care of, that 50 crore, and this is also there in particular your standard in IS 37 para 53. Para 53 deals with this scenario where it states that when some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, the reimbursement shall be recognized when and only when it is virtually certain. Here in this case, Fuel India Limited will be, this 30 crore is disclosed. The reimbursement shall be treated as a separate asset. In such a situation, reimbursement shall be treated as a separate asset. The amount recognized for the reimbursement shall not exceed the amount of the provision. So here, the amount of reimbursement is 30 crores. It cannot be cannot exceed to your provision value. In the statement of profit and loss, expense relating to provision may be presented net of amount recognized for investment. However, if the virtual certainty is there, you can create a asset. In that situation, in your financial statements, you can create net provision of 50 crore minus 30 crore. Outside figure will be 20 crore, but this is a separate provision. This is your separate asset, receivable. They are two different things, okay? But the question asks you to how to disclose the liability. So the liability will be of provision will be of 50 crore. This is the best answer. Okay. Now let's go through the second scenario. How should Mega Energy India Limited treat the insurance claim against fire, loss of fire in its financial statement? So we had the scenario where it was mentioned insurance claim and loss of fire, which was this scenario. MCQ 2. That is scenario number 5. A factory owned by Mega Energy. I have to zoom it out. Okay, no issues. Hope this is clear now. Students, hope this is visible to you. So the scenario number 5, a factory owned by Mega Energy India Limited was destroyed by fire. Mega Limited lodged an insurance claim for the value of the factory building, plant, and an amount equal to 1 year's net profit. During the year, there were a number of meetings with the representatives of the insurance company. Finally, before the year end, it was decided that Mega Limited would receive compensation for 90% of its claim. Mega Limited received a letter that the settlement check for that amount had been sent, but it was not received before the reporting date. However, communication was received, though the check was not received, but the communication was received by the insurance company that the check has been dispatched. settlement check for the amount has been set. If settlement check has been sent, it means it is in the transition. The company has approved your claim. Company has even paid also. From company's side, they have sent a check. So your surety of this receivable has been fixed out. So now the question part is, how should Mega Energy Limited treat the insurance claim against loss of fire in its financial statements? See, when you are sure that you are going to receive 90% claim, then definitely that 90% is virtually certain because check has been prepared, has been sent also by them. So this is your asset, fine? So we'll record that as contingent. We cannot receive as, we cannot write as asset, we have to write as contingent asset, will be received. Second option is do not make any adjustments in the financials and only disclose the contingent asset in the notes on accounts. No, you have to record that contingent asset, that the contingent asset will be received. Okay, so this is no more a contingent asset. This is now a receivable. Okay, so you have to record it as a receivable. You cannot mention it as a contingent asset. So only disclose the contingent asset. This is wrong. Wait until next year when the settlement check is actually received. No, it's accrual. You have received the information before the reporting date or on the reporting date. So it means that virtual certainty has been established. So it cannot depend on when the check is going to be received. You have to account for in the current year when you receive that information that loss was incurred and the claim was made to the insurance company. So this is also not correct. Record 100% of the claim as receivable because only insurance company is only passing 90% claim. How can we record 100% as receivable? So this also goes to wrong. So your correct answer is record 90% of the claim as receivable because it is now virtually certain. Now just read the third scenario. What is the amount of preference dividend to be reduced from profit or loss for the year for calculating basic earnings per share? It's 15 crore, it's 1.75 crore, 13.25 crore, nothing as no dividend has been declared by the entity. So let's move on to the scenario. This scenario is scenario number 6. We have marked it out already. Mega Energy India Limited has issued 10 lakh 9% cumulative preference shares. The company has areas of 15 crore of preference dividend as on 31st March 2024. It includes current year arrears of 1.75 crore. Current year arrear is only 1.7 crore out of 15 crore. So 15 crore is a cumulative dividend because till date no dividend has been paid by the 15 crore dividend has not been paid on preference shares by the entity. The company did not declare any dividend for equity shareholders as well as for preference shareholders. Okay, irrespective of they have not declared, but this is the accrual amount 1.75 crore on preference dividend. So when we are calculating earning per share, that earnings per share is for equity shares or for ordinary shares. So in such a situation, preference shares will not be, dividend on preference shares has to be reduced from the earning. Further, Mega Energy India Limited has also issued certain optionally convertible debentures. So we are not talking about convertible debentures, we are talking about your preference shares. So out of 15 crore, current year preference dividend relates to 1.75 crore. So the solution is, what is the amount of preference dividend to be reduced from profit and loss for the year? For calculating basic earnings per share. Basic earning per share is calculated every year with respect to the earning of that particular year. It is not with respect to the total earning coming forward from the past previous years. It is not like that. Earning per share is for a particular year. So when you are calculating earning per share for a particular year, profit is also to be taken for that particular year. So profit is basically profit attributable to the equity or the ordinary shareholders, not to the preference shareholders. So any preference dividend will be reduced from the total earning and only earning to the equity share has to be calculated or is to be computed. So only current year expenditure will be taken into account because you have to calculate earning per share for a current year based on the profit of the current year. So expenses will also be of the current year. So this 1.75 crore preference dividend which relates to that current year will only be taken into account or will only be adjusted from the profit. Fine. Next question. For the purpose of computation of weighted average number of shares to arrive at diluted earning per share, the diluted potential shares, optionally convertible debentures, be deemed to have been converted into shares. See, first of all, let me go through the scenario. Small scenario further. This is the scenario. This is the scenario. Further, Mega Energy India Limited has also issued certain optionally convertible debentures which are outstanding at the year end. Now, date is not mentioned when this optionally convertible debentures were issued. In such a situation, we are assuming it at the beginning of the year. If nothing is mentioned, if you assume at during the year, so you have to, whenever that date, optionally convertible debentures are issued, from that date you have to consider that these have been converted into the shares for calculation of your, for computation of your DEPS, okay, diluted earning per share. So now the point is, for the purpose of computation of weighted average number of shares, when should the diluted potential shares be deemed to have been converted into shares? So from the date of issue. So it will be at the start of the period, the date of the issue of the potential shares, at the start of the period, or if issued later, then the date of issue of the potential shares. For example, you have issued any optionally convertible debentures previously, in the previous year. So in that case, when you are calculating DPS of this current year, you have to take it from the start of the period. However, if you have issued it during the year, then you have to take the date of issue of the potential share during the year. So this option is the best appropriate answer. This is also correct, but only when debentures were issued previously, in the previous year. This is correct only when debentures were issued during the year. However, you are not aware of the date, so at the start period or the date of the issue, whichever is there, you, based on that, you have to take. So this is the best appropriate answer. Next is, with respect to point 7, what cost should be included in the entity's financial report of the quarter ended 30th September 20XP? First, let's read the point number 7. Point number 7 says, Mega Limited also operates in travel industry and incurs cost unevenly throughout the financial year. Advertisement cost of 40 lakhs were incurred on 1st July 20XP, and staff bonuses are paid at year end based on sales. Are paid, it means they are still to be paid. Staff bonuses are expected to be around 400 lakhs for the year. Of that, a sum of rupees 60 lakhs have been related to the period ending 30th September 20XP. Advertisement cost is given for a particular date, that on this particular date, advertisement cost has been incurred. So it belongs to a particular quarter. Though it is saying this cost is unevenly incurred, because it is unevenly incurred, so we have to take into account that particular expenditure in which quarter it has been expensed out. As per para 39 of IS 34, costs that are incurred unevenly during an entity's financial year shall be anticipated or deferred for it may be deferred for interim period if and only if it is also appropriate to anticipate or defer that type of cost at the end of the financial year. If you are able to anticipate that this cost can be deferred at the end of the financial year, then you can defer this expenditure. If you are not able to anticipate it, then you have to account for that expenditure in that particular quarter when it was incurred. However, with respect to bonus is related to a performance throughout the year. So you are able to see staff bonuses are expected to be around 4 lakhs for the year. Of that, 70 lakhs would relate to the particular period ending this month. So you can defer till the end. And also for bonus, whatever the provision is given is that a bonus is a legal obligation or a past practice which would make the bonus a constructive obligation for which the entity has no realistic alternative but to make the payment. Also, a reliable estimate of the obligation can be made. A reliable estimate of the obligation can be made here of 60 lakh rupees. So in such a situation, advertisement costs will be deferred, but bonus expenses are accrued relating to the period to which they relate. So we have to only account for that expense related to bonus. That amount is to be accounted for in that particular quarter for which it relates. So here 60 lakh relates to that particular quarter. So we'll be taking only 60 lakhs for this quarter and not the whole 400 lakhs rupees. So the option given here is, with respect to point 7, what cost should be included in the entity's financial report for the quarter ended 30th September? So advertisement cost of 40 lakhs, staff bonuses 100 lakhs. No, we are not going to take it 100 lakhs. Advertisement cost 10 lakhs, staff bonus 100 lakhs. No, because advertisement cost is to be, we cannot defer it throughout at the end of the year. So we have to take both 40 lakhs. So this question, this part is correct, but this is not correct. So this option has been ruled out. This part is wrong, so this is also ruled out. 10 lakhs, again, this is wrong, this is ruled out, but this 40 lakh, yes, and 60 lakh, which we can relate to that particular quarter. So this is the correct option, option B. Okay. Let me just go through the query before going to the prescriptive question. Okay. Okay. Still we are yet to receive, so let me go through. Fine. With respect descriptive questions, students, see we are still at 521. I won't be able to take any other case studies, so I'm just discussing the descriptive questions. In short, solutions in detail are with you. Solutions have been uploaded on the website. So I'm just going through this. I'll just brush up the concepts, okay? Determine the entities to whom exemption from disclosure of related party transaction is to be given in the books of Mega Energy India Limited. Also examine the transactions with whom such exemptions applies. Scenario, we have already related the scenario and where we have marked it out. Okay, this is descriptive question 6. This we have marked it out here. Okay, so let's read this scenario. Uttar Pradesh state government holds 60% shares in Mega Energy India Limited and 55% shares in Superpower India Limited. Here I will be saying Mega Limited and Superpower. Mega Limited has 2 subsidiaries, namely P Limited and Q Limited. Superpower Limited is having 2 subsidiaries, namely A Limited and B Limited. Mr. KM is one of the key management personnel of Mega Energy India Limited. So whenever your question comes which relates to the related party transaction, it is strongly advised to make a flowchart. UP government is holding 60% shares in your Mega Energy India Limited and 40% in Superpower. Okay. Now, Mega Energy is having 2 subsidiaries, and one is P Limited and Q Limited. SPIL is also having 2 subsidiaries, A Limited and B Limited. So now, if Mega Energy Limited is having 1 key management personnel, okay, it's having 1 KMP also. So now what to be done? UP government, whenever a government is having stake in any entity, or whenever government is controlling any entity, directly or indirectly, no related party transaction is required to be disclosed with the government or with those entities. However, that related party relationship is to be disclosed, but not the transaction. This is the provision given in the standard. So I'll just mention out the para number for your convenience. You can mark it out. Those is given in the solution also. So para. Okay, para 18 of in IAS 24, related party disclosure, they says a government that has control or joint control of significant influence over the reporting entity, they are not required to disclose the transactions. Okay, they are exempt from disclosure requirements in respect to related party transactions. Another entity that is related party because the same government has control or joint control or significant influence over both the reporting entity and the P and Q के साथ भी कोई transaction हो रहा है. If there is any transaction, there are any transaction with P Limited or Q Limited or A Limited or B Limited, then also the government with, if they are having any transaction with UP government, then also they are not required to disclose that those transactions as related party transaction because it is with the government. And it is with the government, and UP government is indirectly having control over P and Q also. That indirect control is through Mega Limited. Similarly, for A and B also, the UP government is having indirect control through Superpower Limited. So in such a situation, any transaction of AP Limited or Q Limited or A or B Limited with the government, they are not required to disclose it. However, they have to disclose the relationship that they are, UP government is controlling that entity directly or indirectly through whatever entity it is. Okay, they have to disclose that. It is, this scenario is relevant both for Mega Limited, Superpower Limited, P Limited, Q Limited, A Limited, and B Limited, because they are directly or indirectly controlled by UP government. However, and with respect to SPIL, they are having significant influence. So that is also covered within the paragraph 18 of IAS 24. So this, they are also not required to disclose the transactions. However, with respect to key management personnel, Mr. KM, that exemption is not given. This exemption is given only for government entities. If government entities having control, then they are exempted. However, if key management person is having the control or the significant influence or is a key management person, then they are not exempted for disclosure. They have to disclose the relationship also. They have to disclose the transactions which has been done with these entities where he holds that position of key management person. So Mr. KM is one of the key management personnel, so he has to disclose the transaction. Whatever transaction is done between Mr. KM and Mega Energy India Limited, they have to disclose that as related party transaction. Fine. So both the parts we have replied, both the parts for that one, what is for government and what is the disclosure for Mr. KM. What are the disclosure requirements of the entity which has availed this exemption? This I have simultaneously replied you that though we are not disclosing the related party transactions, but we have to disclose the related party relationship. So that disclosure is to be made, and those disclosures are which government you have done the transaction, who are the controlling entities of the government, okay, directly or indirectly, that has to be disclosed. Name of the government and the nature of the relationship has to be given, whether it's subsidiary, whether it's a significant influence, associate, that has to be mentioned. Right? Next question is determine the employee benefit expenses to be accounted for each year. So first of all, let's read the scenario. Let us read the scenario. And we have marked out descriptive question number 7. Okay, this is the scenario. Mega Energy India Limited grants 150 shares to each employee on 1st April 20X2. There were 300 employees as on that day. The shares will vest in the following manner. As on 31st March 20X3, if the profit for the year increases 15% more than the profit for the year ended. So this is conditional vesting. Conditional vesting may be grant was, can I just erase it? I need space to write. I'm just erasing it. We are doing this scenario. Fine. Grant options were granted on 1st April 20X2. Fine. It may vest on 1st April 20X3 also. It may vest on 20X4 also, depending on the meeting of the conditions. If your profit increases from previous year 20X2 to X3, it increases by 15%. Otherwise, you will come to this situation. If not met, then this will go to this situation. Okay. So here it will be from 20X3 to X4, your profit should increase by 10%. Okay. Now let me see what happened, whether the profit, this scenario was met or not. In the question, it was mentioned Profit for the year 20x3 increased by 12%. However, we wanted 15%. So this criteria was not met. So we moved on to 20x4. So 20x4, this criteria was met or not, nothing is given. So we are assuming that yes, the criteria has been met out. Now what to do? We have to account for when it is this criteria is to be transferred to the next year, then we have to split our employee expenses for 2 years. That is for X2, X3 and for X2, X4. For 1 and for 2. We have to split our expenses for these 2 years. If our criteria was met at the end of 20X3, then what would have been done? We have all the total expenses we would have charged for this particular year. But because now we are moving into 20X4, my employee benefit expenses is to be split for 2 years. How to calculate employee benefit expenses? This is the answer requirement. Again, I will be taking eraser. We have to split it for 2 years, and we have to mention 2 things. This is 31st 3x3 and 31st 3x4. Fine. For this 2 years, we have to first know how many employees were there. 300 employees, both for the beginning. For this particular year, how many employees left? 25 left. So 25, you are reducing it. And how much is expected? 35 more is expected to leave. Here, 25 left, and next year 28 again left. So it means 25 left and 28 more left. So for this year, number of employees were 240, and for this year, number of employees were 247. Fine. This was number of employees, and every employee was granted 150 shares. So when every employee was granted 150 shares, so multiplied by 150 shares. Okay, and how many we got this, and what was the fair value of each share? 325. So again, we multiply by 325 also. Fine. You will get 325 rupees. So you will get the amount total expenditure, which will be for this particular year, it will be for 2 years, and for this particular year, it will be total expenditure. So we get that amount, that 58,50,000. Sorry, total expenditure will be, let me just calculate it, will be 240 into 150 into 325. We get this much. So this is 1 crore 17 lakh. We got 1 crore 70 lakh, but 1 crore 70 lakh has to be split for 2 years. So if it is to be split for 2 years, it will be 1 by 2 for 20x3. For x3, it comes to 58 lakh 50,000. Now here, what is the amount it is coming is 1 crore 20 lakh 41,250. Okay, if we multiply this. So this 1 crore 25, this is the total expenditure. Out of this much has already been charged previous year. So what is left over is 61,091,250. So 61,91,250 is to be charged for this particular year. So this was the requirement of the question. A general entry, simple general entry has to be filed every year. Expense has to be debited. That equity reserve has to be created. Next year, then that expense is to be transferred to P&L account. When those shares they have been exercised, when those options are exercised, at that time you have to pass the entry by debiting the equity reserve and crediting the equity along with the securities premium, because your shares might be of say 10 rupees or 100 rupees, and you have been fair values of 325. So whatever difference is will be the securities premium account. Okay. Now let's move on to last scenario. Let me check any question are there. So there are no questions yet. So let me move on to last scenario. Last scenario says, what is the balance of total equity and other equity after transition to IFRS? Show the reconciliation between total equity as per existing GAAP as per IFRS to be presented in the opening statement of financial position. As on this, ignore deferred tax impact. So we have to simply calculate what is the transition impact. Whenever transition is done, any change because of change in the measurement, because of change in the classification, because of the recognition or de-recognition is rooted through equity. Equity means retained earning here. Mostly retained earning, but in one case you can use evaluation reserve. That is when there is a change in the fair value of your assets, PP. In that case, you can use revaluation reserve. Otherwise, everything is to be rooted through. Any change in the value is to be rooted through your retained earning. So let's move on to the scenario. We'll quickly go through the scenario, and this is the scenario. One of the recently acquired subsidiary XYZ Limited. I'll just quickly move on. XYZ Limited opted to fair value land as on the date of transition. The fair value of the land as on 1st April 2002 was 10 crore. The carrying amount as on 1st April 2002 under the existing GAAP was 4.5. So difference because the company opted to do fair valuation. So it means they will be recording their assets for 10 crores. If they are recording their assets for 10 crores, so and however the carrying value was 4.5 crores, they have to enhance the value. They have to increase the value of PP. By what amount they are increasing is 5.5 crore. This 5.5 crore will increase the retained earning because it is increasing your assets also. So from in the balance sheet, your asset side is increasing. So at the same time, your retained earning will also increase. Then only your balance sheet will tell you. Okay. In the second point, XY Limited has recognized a provision for proposed dividend of 78 lakhs during the year. It was written back as an opening statement of it. So as per your IFRS, you are not supposed to record proposed dividend. So whatever has been recorded as provision, that has to be reversed. How it will be reversed? The entry will be provision DR to RE. So this provision, whatever you have created, will increase your liability in profit and liability will extinguish. So 78 lakhs will reduce further, increase your retained earning. XYZ Limited fair values is investment in equity shares. On the date of equity transaction, the increase on account of fair valuation of shares is 75 lakhs. So what is their equity share की value बढ़ रही है, equity share की value बढ़ेगी तो क्या हो रहा है, increase in the fair valuation of shares is 75 lakhs. So you will be taking this value. So, your investment value is increasing, it will be ungain, your entry will be investment to retain earning by 75 lakhs. Okay. So again, 75 lakhs will increase your retained earning. The XYZ Limited has an equity share capital of 80 crore and redeemable preference share capital of 25 crore. This is the information given because for a translation purpose. The reserves and surplus as on 1st April 2002 before transition to IFRS was 95 crore, representing 40 crore general reserve, 5 crore capital reserve. So let me just prepare a statement here. First, okay. I was having equity because it is also mentioned the company elected not to restate its earlier business combination. The company identified preference shares as nature of financial liability. So your equity is only this 80 crore. In this 80 crore, you will be adding retained earning and other reserves. Okay. The other reserves are general reserve, which is your 40 crore, your 5 crore reserve, capital reserve, and retained earning. Retained earning you have to compute because certain adjustments has been done. Retained earning is 95 crores minus 40 minus 5 is equal to 50 crore is the retained earning before adjustment. In this adjustment, what you are going to do, you have to increase this 5.5 because of increase in the value of the asset, 0.78 because of increase in the de-recognition of proposed dividend, and also 0.75 lakh, 75 lakh for increase in the value of investment. So total you are going to increase 57.03. So total your equity will now be 80 plus 40 plus 5 plus 57.03, which comes to 182.0. Now similarly, when you are preparing the reconciliation, you have to identify the nature of adjustment, whether it relates to remeasurement, whether it relates to recognition or de-recognition, it relates to reclassification, that you have to take into account. Like first transaction, change in the fair value of the land is due to remeasurement. Recognition of proposed dividend, you are reversing the entity, so it is de-recognition. Change in the fair value of investment, this is also again remeasurement. And instead of treating your preference shares as instead of treating it as capital, you are now treating it as financial liability. So this is reclassification. So you have to mention every aspect with different heading, and then you will come at the same equity which is there, 182.03. That is the reclassification. I can just show you the answer, just a minute. So this will be the method of presentation. Okay. See, you arrive with 182.03, but when you are doing reconciliation, for reconciliation, what you have to do is that you have to take equity as per previous GAAP. So your equity comes to 80 plus 25 because in previous GAAP, your preference share capital was treated as capital. Preference shares were treated as capital. So your with reserves and surplus, your equity as per previous year was 200. In that you have made adjustments, adjustment due to classification, adjustments due to recognition, and adjustments due to measurement. This separate heading is to be given for each nature of adjustment. And after that adjustment, you'll arrive at the same value as per transition which you arrived here. Okay. So this is the manner you have to do this type of solution. Hope students, again, let me just go through the query. There are any, otherwise, hope students will follow the approach which we have discussed. Though those approaches are my opinion, but still I feel this may help you in your examination as well. So just take care of those approach, use it wisely. All the best, students, for your coming examination. Thank you.